All right, everybody, welcome back to another edition of Market Talks with DrStoxx. I am fresh from a workout, so pardon the sweaty mess that I am, and not that anyone can smell me, which is a good thing. But I'm coming to you live from the live trading room, DrStoxx live trading room. And if you want to join me and a big group of really, really nice people, great place to hang out throughout the day. We tell jokes, we give each other encouragement, we share what we're looking at in the market, and I give you my every trade. So if I'm in a micro E-mini or a stock or option or exchange traded fund, I let you know my entry price, my stop price, my exit, and why I'm in the trade. And we trade throughout the day together. We're making some very good money. You'll see our performance record after you get into the room. You can take a look at that. It's very, very good. I have to say, we're actually just hitting all-time highs today after a little bit of a dip on the DeepSeek fiasco. DeepSeek Gate, I'm going to call it. And if you want to join us, go over to DrStoxx.com. That's DrStoxx, site that's been in existence since October 2002, if you can believe it. I've been trading since 1996, been profitable since 1998, and in 2002, I launched my first letter, the trend trade letter, and it's been going every market day since then. Long time, right? 2 decades or more. All right, so click on the subscribe button and you'll see live trading room. That's where we are right now. I also have a live options room and several letters that you can subscribe to. All right, enough of that. Let's get over to some charts. All right, so this is a new trading setup I have here because I purchased from a friend of mine who builds technical indicators in charting packages, TradingView among them. And it's down here at the bottom. Now, on top of the screen, I've got the linear regression channel, 1.5 and 2.0 standard deviations. It gives us a pink buy zone and a blue sell zone with a midline in between. Got the 21 EMA on there, along with the 50 EMA and the 200, the 50 SMA, the 200 SMA. I'm going to get rid of that indicator right there. And volume bars down below, color coded depending on whether open is below the close, close is below the open, etc. Got stochastic set at the 14 periodicity, and this is the new indicator down below. Sorry, I don't remember the name of it. If you're interested, I'll drop a link in the room. Just let me know. And here's how this thing works. So you have two things going on. You've got a background color, which right now is on the greenish side, kind of hard to see, but I've got it set at green. If this background color here is green, then you're in a long-term uptrend, and you're looking for buy signals. The green bars are the buy signals. So the idea is that you would buy whenever you get a green bar with a green background. You ignore the red bars. If you get something, I don't know, what's going to be in a downtrend here? AMD. Hard to see. I can see it more clearly on my side, but that's a red background. And you would ignore all the green buy signals and you would focus on the red signals. The red signals would be a sell short signal. Okay, is it a perfect indicator? No, there isn't one. Is it flagging some really nice looking signals? Yes. Do I know whether it's worth using? Not yet. I just bought it last night. I'm moving around, testing it, see if it will give us a good signal. It did give us a signal, I have to say, that I took this morning. So if you look at the price of oil, USO, and this may turn out to be a pretty good trade after all, but here's the signal, right? So you've got an uptrend, you've got green background right here, and you've got a fresh green buy signal on the indicator. You also have a fresh buy signal in stochastics. You've got a fresh, as of today, 50 cross over the 200. That's what's called the golden cross. You don't really want to trade on that necessarily, but it is a good thing. And we're holding after a 2-week pullback at a very key level of support. You can see this level goes all the way back to, way back here into March of last year. So seems to me like this is it's a typical pullback, right? You've got the uptrend, and you've got a higher low at support, midline of the LRC, former resistance, now support, with oversold stochastics flashing a buy signal. And now my new toy is also flashing a buy signal. So we went long oil this morning, and it hasn't worked out yet for us. It got off to a good start, and then it just was all downhill from there. Oil's been a difficult trade. I've been out of energy pretty much all year, 2024, after a couple of stop outs, and it just wasn't getting a good read on energy, XLE, ERX, the Oilers, oil itself. And this is my first venture back into an energy trade, so we'll see if it works out. And we're giving our friends indicator a test. It'll be a few days before we know whether this actually pans out or not. All right, let's look at some. Let's look at some indexes, and then here's what I want to do with everybody who's watching this. I want to talk about, very often. Let me pull over the 5-minute chart of QQQ. Right, this is the NASDAQ 100, and where is the open? The open is right there, 9:30. So it opened somewhere in the middle of the pre-market range, got off to a very quick, strong start, and then it was all downhill from there. There's no real way to know whether this is algo-driven selling pressure. In fact, to me, it doesn't quite look like it is, because typically with the algos, you'll get a series of price bars that are pretty much the same size, and you get a series of volume bars that are pretty much the same size, because algos are programmed to do just one thing: sell, 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 or buy, 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 buy. You can get a little bit of feeling for that, like with these 3 bars right here. That was probably an algo buy program kicking in at a certain level of price support. That's what they do. Whenever it gets anywhere near price support, the algo buy programs kick in. And the sell program was probably these 3 red bars right there. So that's what triggered the sell-off, with heavy volume right off the top. It hit a threshold level at the top. Sell programs kicked in. It got all the way down to a level of support at the bottom. Buy programs kicked in. That's how algos work. There is a little trick that you can do that if you see these early sell-offs, right, you're kind of thinking, oh, this is the market rolling over, the market's going to go right back down again. I better get out of my longs. I better run for the hills. I better go to cash. I better put on some hedges. Here's a way to prevent that from happening and to keep you in the trade. Not that we do that perfectly. I don't always do that perfectly, but it is a helpful trick. So here's what you do. When you start to see these early sell programs, you see this sell pressure like we just saw in the major indexes and in the mag stocks and elsewhere. Go over to finviz.com, and take a look at these numbers here. Advancing, how many stocks are going up in the big board. This is the New York Stock Exchange, NASDAQ, and the Amex. So there's a big, 5,000 stocks that this is recording. No, more than that. You can see 9,500 stocks that are in this group here. Advancing versus declining, new highs versus new lows, and how many stocks are above the 50 period moving average, how many are below. If you look at those 3, and if they are predominantly bullish still, even as the sell programs are kicking in, you know that the market internals are quite good, quite strong, and that this algo-driven selling pressure is likely, not necessarily, but likely simply a matter of attacking the indexes themselves, and probably the top stocks at the top of the indexes, Apple, Google, Microsoft, etc. Attack, 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 attack for a period of time. But if the market itself is still very strong internally, you've got more highs than lows, you've got more advancers than decliners, you've got more stocks above the 50 than below, then it's likely short-lived. You just hang on. If you have to move your stops a little bit out of the way, okay, you do that. But whatever you have to do to stay in the trade, because more likely than not, it will pan out, it'll hit a threshold, and then you're going to be right back up again, and you're going to kick yourself for getting out at the bottom, and you're going to have to chase the price higher, and man, you really don't want to do that. really don't. Now, there's another little trick that you can use. That's one of them. Here's the second one. You put on a VIX fund of some kind. That's good to use is UVXY. And UVXY is a leveraged version of the VIX. It's a horrible trade. The only time this ever works is if you get really big slam like we did with the DeepSeek fiasco a few days ago, right? There's the DeepSeek right there. I'm not sure what this is. This is back in December, so that was probably the big FOMC day when the market gapped up and then came all the way back down, really big long red bar, and you had the VIX rising all day long. Here's a trick you can do. Go down to the 5-minute chart for UVXY, and let me see if I can find the open here. All right, so the market today opened down. The UVXY opened down because it was a gap up on some big earnings last night that turned out to be pretty good. The market liked them. And then it was a sell for about an hour and a half, 2 hours. Here's the thing you want to watch. So if UVXY is unable to get above the previous day's high, and in this case, we're not even above some of the moving averages, right? The previous day's high is up in this area. So if it's not able to get above the previous day's high today relative to yesterday, then you have a pretty good chance that this sell program, this algo-driven move off the open, is just a matter of shaking out weak hands and running stops and getting retail traders out of the market so that they can grab their cheap shares. Keep an eye on the UVXY and keep an eye also on the market internals, these three right here. And these are the two to really focus on. Those are the two, right? In fact, if you have to look at just one, just look at the advancing decliners. You're going to see this flux quite a bit throughout the day. But if there are more advancers than decliners, you still have market breadth acting strong, probably short-term, temporary sell-off. Those are the two tricks. Market internals and UVXY on a 5-minute taking out the previous day's high. Got that? All right, let's get back to charts. And let's get back to the daily chart. And I'll give you a quick assessment of where we're at with the indexes. Everything's a bit of a mess right now. Let's take a look at the S&P 500. Zoom in a little bit. All right, so we had this this really nasty sell-off, right? This was right around that's the FOMC day right there. It had a knee-jerk 3-bar reversal back higher, but a lower high. Testing the lows again, a weak bounce and another lower high, and then a lower low, and then everything looked at that point like it was going downhill. New downtrend. Uh-oh. Oops. No, it wasn't a downtrend. It was just a falling wedge. So that bar right there, that is your buy signal. It's a reversal bar. It's a classic reversal bar. Classic reversal bar, I've said this many times, opens within the range of the previous day, travels south, takes out at least 20 days of lows, travels back north, closes above the open, and within the range of the previous day. I would say 70% of the time, you're going to get some follow through to the upside on a reversal bar like that. So pay attention. The other one you want to pay attention to is the inside day bars at the top of an uptrend or down at the bottom of a downtrend. But this was a classic reversal bar, and it was a beautiful one, and it triggered a very nice 2-week rally off the lows all the way up to test the all-time highs. Now, we had this whole InfoSeek or DeepSeek or whatever the heck it was called coming out of China, undercutting our American companies, NVDA and Avgo and a bunch of other semiconductors, because they were doing AI stuff at a fraction of the cost and at the same speed, even without the need for data centers and all the hypercooling and all the kind of stuff that we need because we've got all this equipment going on. I don't know how they did it. Maybe it's not really real, a bit fabricated. But here are a couple of things that have happened. So countries in Europe are now starting to shut DeepSeek out of their market. Right, they're putting a ban on DeepSeek. Rumor is that Trump is probably going to do the same thing here in this country. So that's a plus. Our military is saying no DeepSeek. I don't even know what that means, but they're saying that, right? No DeepSeek on military bases. Um, and then you get Microsoft came out yesterday saying, "Hey, we have actually adopted some of their because it's open source, right? We've adopted some of their code, and we're now using DeepSeek." Okay, well, I guess that's a good thing. And there was another thing that I'm forgetting what it was about, but anyway, we're seeing these series of uh, uh, kind of mitigation of the threat that DeepSeek poses here, at least in this country, but also in Europe. That should be very good for our American-made semiconductors, and for our cloud names, and for data center plays, and for energy plays, all the related things that are spin-offs of AI. So should be really good. I think by the time we get out to next week, it's all a done deal and it's all forgotten. There were some really nice moves, and if you were nimble, you bought yesterday. No, you bought 4 days ago the low down here in the pink zone, right? Buy the pink in an uptrend, sell the blue in a downtrend. We weren't so nimble, but we did put on some MNQ, the Nasdaq trade, and we also have we still have some Russell 2000. Speaking of Russell 2000, let's get rid of these. So we had the breakout. Now we're printing a very nice looking, and it's not perfect, but it is nice looking bottoming pattern right here. It's maybe more of a cup and handle, but it is a nice looking bottoming pattern. It's very bullish. We have the we have the lower left shoulder. Where's my other hand? Okay. So the left shoulder is a little lower, the right shoulder is a little higher, and the head is the lowest of all, and that is about as good as a inverted head and shoulders can get. We also held 4 days in a row, even with all that DeepSeek stuff. We held 4 days in a row the 21 period moving average. Good things happen above the 21. Sometimes not so good things happen below the 21. And a big green candle today on good volume. So we're long the small caps. And here's my thesis on the small caps. And I've been holding this thesis since Q4. The big mags are a crowded trade. Now, selectively, we can dig down into some of them. Like we're long NVIDIA right now, having bought the dip. We're long Microsoft, having bought the dip because they went way down on the DeepSeek stuff. But as a group, I think they're really kind of long in the tooth. They're probably not going to have a great Q1. They're not going to outperform the rest of the market like they did in the entirety of 2024. But the market itself will do very well overall, probably 10 to 15% on the year, because of those other sectors that are going to get a lot of inflows as the crowded trade starts to peel off, as people start to unwind their huge positions in some of these plays. And I think the DeepSeek stuff probably triggered some of that to begin. As they begin to unwind, that money's got to go somewhere. They're not going to chase bonds. They're not going to chase money markets. They're going after alpha, and that's going to mean small caps, biotechs, healthcare, hopefully some energy plays. Hopefully oil gets back on track. Gold has been very strong. The miners need to catch up, and they've been very strong today. So you've got a lot of great sectors out there. I think especially some of these smaller cap software AI cloud names that haven't been able to compete with the giants. If DeepSeek is in fact a thing, and if the source is open code, if the code is open source, they ought to be able to adopt that and really start to be more competitive. And that's why you're seeing stocks like Upstart and Unity and Affirm and others that have an AI component. They're really catching a good bid this week. All right. Small caps. We like small caps. Home builders. Let's take a look at home builders. They're going to be doing well because interest rates have peaked out again. We just had a horrible housing starts number or home sales number. I forget it was. It was a housing number of some kind. It wasn't very good. We also had a little bit of a miss in our GDP as well. So there's still a little bit of concern out there on a shrinking economy. But my thing is that my thesis is that the economy is not getting smaller, it's just shifting. It's not a risk off environment, it's a shifting risk environment. The risk is shifting from the top of the indexes down to some of those lower tiers. And so that's where the real trade is now, down in those lower tiers. All right. So home builders look a lot like small caps, right? And they, for the same reason, because they've been hindered by high mortgage rates, high interest rates, and man, we're out buying a car this week, and we're just going to bite the bullet and pay cash because the 7-8%. We have excellent credit. 6.5 was the lowest we could find, and 7.5, 8% was the norm. And I'm not paying that. I'm not going to make a bank rich. I'm just going to take some out of the trading account. Of course, when you think about it, if I can make 30%, 40% a year on my trading money, and I'm only paying 7% on a car loan, I know. I just don't like the idea of paying interest. Anyway, so homies, we've got a rounded bottom with a handle forming right here. This is quite a bullish. It's not breaking out yet, so there is still some upside that needs to take place, but it is getting very close. Horrible numbers out today, but it is a reversal higher. Hasn't taken out yesterday's lows, took out yesterday's highs. In fact, that's looking pretty good. Hack is another index that we want to look at because, if DeepSeek, one of the concerns about DeepSeek and TikTok and others are that these Chinese companies have made incursions into our behind our security framework, and they're getting all kinds of data on us. That's a very big boost to cybersecurity. Fortinet is your best of breed, but there are some others. We also like CrowdStrike. We like Palo Alto and CyberArk. Those are my top four in this space. And after a really bad day yesterday, they bounced back up today, and they're printing new all-time highs. So keep an eye on this space. Most of those guys have earnings coming up very quickly, so probably not a trade just yet. Let's take a quick look at biotechs. We are long biotechs in our long-term portfolio, and it is starting to show some nice looking bottoming potential here, right? Not perfectly formed, but it is an head and shoulders, inverted head and shoulders potential bottom. We just need to get up above the 200 period moving average, and then biotechs should be back on track. I'm long some bond calls in my live options room. We just bought those in yesterday on the dip, and I do think that bonds is, if you can leverage them, TMF is a good way to play this. Calls on TLT, another good way to play this. But I do think that these bonds will do better than they did in 2024. 2024 was awful, right? I mean, it had a stretch of really nice upside. And we were playing that by selling a put premium on TMF. We did that week after week, and it was a nice profitable trade. And then it just started to go south. And then we got put shares in TMF, and I hung on to them too long. I made all the classic mistakes that you're not supposed to make. And just to show you, I'll just share that because no matter how long you've been trading, I've been trading, I don't even know, 23 years or something. No matter how long you've been trading, you still will stumble and fall because you always think, man, this time it's going to work out. If 80% of the time you can stick within your system, stick within your discipline, don't take those big risks, cut your losses short, move up your stops, be very selective. If you do that 80% of the time, then you can kind of play around with the other 20%. And sometimes you get a really nice winner, and sometimes you don't. All right, we are long Bitcoin in all kinds of ways. So we have a call spread on in the live trading room. We've got IBIT, IBIT, and ARKB, and the micro e-mini MBT in the live trading room. So we're covered with Bitcoin, and I really don't want to sell. We've been getting a little bit in and out with the micro e-minis. Right? We sell at the highs and buy back at the lows. We've been doing that for a while. But I just want to sit on it. I just want to sit on Bitcoin. I think that 2025 is potentially a very good year, and there are all kinds of good reasons for that. You've got a very pro crypto president. You've got the potential of a Bitcoin reserve. You've got um, who are the banks now that are opening up Bitcoin wallets? I'm not sure who that is, but there are some banks doing that now for the first time. You just have all this. There are so many different ways of getting into Bitcoin, and most people aren't in it. So most people have stocks, but not most people have Bitcoin yet. So the market is huge, and as everybody knows, it's a limited market, right? It's like gold. It has uh, value that will only get higher as demand rises. Semiconductors, I don't know. This was a big smash on DeepSeek. Really horrible, right? Because this really took out, put a lot of technical damage into the chart. With that said, I do think that this is probably a good buying opportunity, and I like what it's doing today. It trapped the bears on the DeepSeek news. It rallied back up the next day, a little bit squirrely yesterday, but didn't take out the lows. And today we're well above the lows, and we're taking out recent highs. And if we can close about here by the end of the day, it's got a very good chance of getting back on track, back up to about 260. We're long some calls in the live trading room, and we have SOXL, the leveraged fund, in the live room. Let's take a look at China, because China, it was in breakout mode, and I think Baba reports tonight. If it hasn't already, did Baba report already? Let me check. No, not yet. Looks like it's tonight. So I like this. This is the FXI. This is the non-leveraged large cap blue chip index fund for China stocks. The top 20 stocks are in FXI, including Baba, Baidu, and a bunch of others. And it broke out the other day. Of course, DeepSeek had no influence or no impact on this at all. In fact, it was positive, and a big, big move today. Someone asked me in the options room whether I thought China was still tradable, and I said yes, absolutely. Uh, we are in CWEB, which is a leveraged internet fund for Chinese stocks. I'm not sure that was any better than yin, YINN, which is a little bit more broadly diversified. But I think it's Baba, Baidu, and what's the other big Futu, and some others, PDD. All of those form the healthiest and strongest companies are the companies that are in this fund. So that's why I like CWEB, typically traded over yen. But if you're a little bit confused about, if you want more broad diversification, go with yen. I like yen. So this is a fresh breakout. It'll probably do a little bit of back and fill tomorrow because that's a big stick. You've got Baba coming out tonight. There's some danger there because Baba's been in a long-term downtrend, but sure seems like it's getting back on track. China in general getting back on track, and yeah, if this DeepSeek thing has legs, then they may do really, really well. All right, let me take a quick look at the mags. So Microsoft is down, but I do think Microsoft is a buy. We just bought some in the live trading room on the tag of the support trend line in the pink zone, and it was forming it. I won't show you, but on the 5-minute chart, the 15-minute chart, the hourly chart, it was starting to do some bullish things on the internals, on the shorter time frames. So we got long Microsoft. There was also a massive $15 million purchase of calls with a lot of time and way out of the money. So if you're going way out of the money and you're spending $15 million, you've got some conviction on Microsoft. So that triggered my thought, and I started digging down into the charts. And of course, it's Microsoft. It's got to have a bounce back. Everybody needs to own it. Funds are out buying, I'm sure, hand over fist on this dip. So Microsoft looks okay. It's just having a horrible day today because it reported earnings last night. They were good. They were really good, beat expectations, but for whatever reason, the market is selling them off. Here's CRM. I don't really like this chart. It's, if you go up on a breakout and then you come right back down again to near where it started, not a good thing. NVIDIA, same. I like NVIDIA for the same reason I like Microsoft. It is at a supporting trend line. It's the biggest blue chip, best of breed semiconductor play. The DeepSeek thing, which knocked it way down. It's not even earnings, right? It's just the DeepSeek thing knocked it way down. Probably going to blow over next week. We're at the 200 period moving average. Started to see some bullish stuff. Here's a good tip, right? Massive volume on the downside. That bar right there looked horrible. I have to, below the 200, horrible. Really gave the threat of going a lot lower. It got rejected decisively the next day on very good volume. It not only took out the low, it also took out the high, and it closed right to a penny, closed on the high of the day. Next day was an inside day bar. Inside day bars at the bottom of a pullback are bullish. And today's a little bit squirrely. I'm surprised it hasn't really gotten much traction. Maybe because of the Microsoft earnings, I don't know. But it is printing now as I speak a nice looking reversal hammer. It came down, took out a bunch of yesterday's stops, sucked in a whole bunch of new shorts. I know because I saw them getting short. I could see the put flow going through, put flow on NVIDIA all morning long. And then just it hit a threshold and right back up again. We bought it somewhere in the middle of that down leg there, and we're long in the live trading room. And we also have some calls in the live option room. Tesla. I think Tesla is. I said this a little bit before, but I think Tesla is a very good long-term hold. I've been long Tesla for 6-7 years now. My average buy-in price is about $35, something like that, with all the splits. And I keep adding to Tesla every twice a year or so. I just throw it in. I don't try to time it. And I do think that this is probably a $700 stock by the end of 2025. I think it'll hit 500 in quarter one. I think it hits 700 by the end of quarter four. And then I think it's just getting started. So I really like Tesla. However, it's also a fun trading stock. We're in TSLL. We bought the lows earlier today, rallying back up. I like it a lot. Google's on tap next week. So very nice looking chart. Really nice, strong, up at the highs, all-time highs. All that can change on earnings, but I think Google's going to knock it out of the park. Apple is up tonight. It's a little bit iffy here. That's a horrible downtrend. You had a gap down, bearish gap down. It held support above the 200. All that's good, very good. But this is a rather weak rally on falling volume into the 50-period moving average. That's typically, just from technical analysis perspective, typically where you get the rollover. But earnings are tonight. So Jefferies came out and downgraded Apple because of their sales checks didn't look very good. Oppenheimer, which is like the fourth or fifth, Jefferies is number one. Oppenheimer, fourth or fifth best analyst firm, came out and downgraded Apple, lowered their price target for the same reason. The market has maybe already priced all of that in. Right? There's your Jefferies downgrade right there. There's your OP downgrade right there. The market has probably priced all that in. If they just match expectations or do a small beat and they talk positively about the future, I think Apple will do okay. But technically, it's just in a no-go zone for me. I'm very curious to see how it goes. As goes Apple, so goes the rest of the tech market. Facebook was out last night. It was a very good report. Market didn't like it originally, but then thought better of it. The only problem is it's not a buy. It's a hold, not a buy, because it's just too extended up there. ARM is going to report in a few days. Really curious to see if this soft semiconductor company can do well. It's one of my favorite IPOs. That's the DeepSeek. Hit the top of a former resistance line, now support. Nice little bounce going on today. I wouldn't get into it ahead of earnings, but I would like to see it do really well. Last look is at AMD, which is getting a lot of good press this week. More and more people are getting interested in AMD after being really, really out of favor with the market. Really out of favor. It peaked way over here, way back in March of last year. And it's been in a downtrend ever since. Yeah, it had some nice rallies, but this is just ugly price action. It doesn't really get any uglier than this. This is the kind of price action you see in companies that are heading to penny stock status. I don't know what's going on. I really don't. It just reminds me of Intel, right? Intel was past its peak, past its prime, and it was just all downhill, and it's still not doing that great. So if they can turn things around on earnings, I wouldn't buy it ahead of earnings, but if they can really do well, we get a power gap up. It holds that gap for about a week, right? Doesn't go back down into it. Then it could be a buy. All right, guys. I'll take a few chart requests. So if you want to type a few ticker symbols, I can't take all of them, but go ahead and start typing. Oh, Flute. I haven't looked at that one for a while. So Flute was. This is a it's like a DraftKings kind of thing, right? It's sports betting. Other forms of gambling, I'm not exactly sure, but it is in that space. It was on the IBD leaderboard for a while. They took it off. It was in the IBD top 50 for a while. I don't think it's there anymore. Not sure what's going on, but it has had a really nice chart. So here's your uptrend. You've got you had the 21 above the 50 above the 200, and then the 21 crossed over the 50. That's never a good sign. Typically, that means the momentum is slowing down. And when momentum slows down, it slows down for a reason. It's not just a price dynamic thing. It is something going on in the company and falling out of favor with the market. So I would not buy this on the way up. I would buy this on the way down as a dip buy so that you take some of the risk out of it. So down here in the pink zone, where you have those three green candles right there, and here's your buy signal right there. There's a fresh buy signal from my friend's indicator. That's a time to buy down around 252 or so. It's up at 272, so this one can really move nicely, very quickly. Now, with that said, I'm also spotting something right here that I like. So this is it's not quite a continuation, right? A cup and handle continuation has to be up at the former highs. The former highs are up here, so we're not there yet. But as maybe at the end of this little pullback with a 280, 282 target, I could see that happening. But, 273 to 280 in a $300 stock, not exactly a great trade. I wouldn't kick anybody in the pants for having already bought it down here in the pink zone and hanging on to it for 280. Absolutely. Great trade, but I wouldn't buy it now. There are better setups out there. Cake. I have not eaten in a cheesecake factory, right? I have not eaten there in a long time. We used to go all the time. We lived in Ohio, Northeast Ohio, and there was one not far away from us, and boy, we went there a lot. It's a great restaurant. I don't know how they're doing. I mean, the restaurant place, CMG, not doing that well. What's the other one? Kava got off to a great start. Also had a really big pullback. This chart, however, is off to the races. This looks really good. So clearly they're in an expansion phase of their company. Let's take a look at the weekly chart. Yeah, so their all-time highs are up there about 64, and here they are at 56. That's not too bad. It is in breakout mode. Now, with breakouts, there are two times to buy breakouts. when it coils up underneath the resistance, right in this area right here, right, a lot of churn. We'll dip into the buy zone. That's actually a very nice looking um, buy signal right there. You have an inside day bar here after a pullback. That's a bullish buy signal. You want to get in ahead of the breakout. That's number one. Number two, you get in on a breakout plus retest. So it breaks out, goes up for 2 days really sharply, and then comes right back down and tests the top of that breakout line. That's where you want to buy it as well. That's number two. I would not buy it up here. I have a rule about big green sticks. Don't buy big green sticks. Typically, you have a big green stick and you buy it up here toward the end of the day, you could get a much better price the next day. Here's a big green stick, much better price the next day. Here's a big green stick that didn't do that, so it doesn't always work. But just take it from me, please. Don't buy big green sticks. If you're long, it's a hold. I don't know where this is going. I really don't. But there is, yeah, it's pretty close to that trend line, a test of that resistance line. So, but it doesn't mean it will roll over and fall down. Typically, what these do is they go a little sideways and then back up, sideways, back up, sideways, back up. Slow, sluggish, upward price movement. That's probably where this is going. It's a hold for sure. It's a hold, but it's not a buy today. Twilio. So this is a power gap, and it's not even on earnings. I don't know what that's about. It seems to be on the same day as the DeepSeek. So is that related? I know that guys in the room were talking about Twilio, and I didn't see what they were saying. So there may be some news out on the company, but this is a power gap extraordinaire. Beautiful, beautiful chart. Uptrending. Look at this really nice, very, very nice consolidation right there. So you have the uptrend, 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 and then it goes into a sideways base for about 4 or 5 weeks. That's very, very bullish. You want to buy, of course, in the pink zone or somewhere near the 21 or at the support line ahead of the breakout. But of course, you don't know that this is coming. So, that was, if you enjoyed the breakout, pat yourself on the back for being really, really smart. Now, power gaps, you want to see it. You don't want to see that gap close. If the gap closes more than 50%, if it comes down more than 50% of that gap, then it's a no-go zone. Just let it go. If it comes down to the line of the gap, which is typically what they do after a week or so, that's a very good place to buy it. This one may not come back. This one looks really, really strong. It's just been up, 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 up. Volume starting to taper off, so it's a hold. It's not a buy up there. I would wait until it comes back down and tests like 136. Nice chart, though. I used to be in Twilio, was in the family fund for several years. Was one of my favorite cloud plays, but I haven't been in for a while. APO, so this is best of breed, at least it used to be in the asset management space. Yeah. Oh, this is good. This is good. So we were in APO as a put premium play. We were selling puts every week, and it was just a great trade, right? All of this uptrend, really good stuff. And then it had this slide down, and we had to, I don't know where we got out. I think it was on that big red stick. We just got out and closed it. But I like what it's done since then. So it did test below the LRC. That's 2.0 standard deviation. Bounced right back up again. Put a little bit of a handle right there underneath that resistance line. It's right at the line right now, but it sure looks to me like this is ready to go higher. Of course, earnings, anything can happen. Last earnings were great. Big gap up. Last earnings before that, not so good. Big gap down. So I would be wary of holding over earnings. I have no idea if there's an edge here. There might be, but I would wait. I would wait. But that is really nicely set up. If there were not earnings, I would say that's a buy. Let's do two more. OSW. Okay, you want to get out of this one. You want to take your profits. It's had a nice run. Consider yourself very fortunate to have gotten those big 3 green bars in a row on increasing volume. But the gap and crap today is not so good. It's probably going to put on the brakes. It doesn't mean that it's going to fall. It's not a short by any means. But it does mean that the upside has probably been seen. It could go 2, 3, 4 weeks of some sideways churn, testing some of the intraday lows. You don't want to be stuck in a position doing that. So I would get out. Now, of course, it can do whatever it wants. It can just keep on going up until infinity. The market has a mind of its own, but just from a technical perspective, the 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 good ride is done for now. Buy it more on a pullback. So 2050 looks like a good line. If it does come back, 2050 is a better place to get back in again. One more, ACN. So this is a healthcare play, and it was the subject of some bad news for a while. Right there, some big slams, big red bar, right back up again on earnings, and then market didn't like it, right back down again. All of that price action there is constructive, but not, um, if you were holding throughout all this period, that would be a very frustrating hold. Very frustrating. You're up to 365 and then you're down to 345 and then back up and back down and back up and back down and not getting anywhere. The good news is that the wait for all of that is probably over. And with the breakout and the confirmation and the rejection of that reversal in the blue, right, which typically spells an end to the upside, you got another big upside today. And I don't know if that's no, not quite all-time highs, but we're getting there. Yeah, so it looks like it's put the bad news behind it. It's got a lot of good value. Earnings are still quite a ways away. I would say this potentially could be a buy today. It wouldn't be the best setup. It's not a good risk to reward ratio because you're going to have to put your stop down here around 368 or so, which isn't real bad on a $400 stock, but you have to give it some room. The chances of it coming back down and testing the top of the resistance line are pretty good. I don't think it's going to do that, but there is a chance that happens. If you're already long, if you got in down here and you're already enjoying this breakout, just hang on. Just move up your stops, right? Move up your stops, put it underneath yesterday's low, and then tomorrow put it underneath today's low and keep rolling it up as long as the market will have you. All right, guys, I'm going to let you go. I'm going to stop the recording. I'll produce it, send it over to the YouTube channel, get back in the room. We'll finish up the rest of the day. We've got about 40 minutes of trading left. God bless everybody. Bye for now. See you later.